We've seen incredible demand for munis.
We have.
Give me a sense of how much flow we're seeing into municipal bonds this year.
We've seen 25, 26 weeks of straight flows into municipal funds that have amounted to almost $50 billion going back to the beginning of January.
And we're seeing the availability dropping right now. We're down from $4 trillion in 2009 to $3.6 trillion in outstanding munis at the end of the first quarter.
Oh, yeah, overall issuance is down, and that's one of the things. You've got demand rising. You've got demand rising for a couple of reasons. The tax cut. One of the things that analysts and strategists have been saying for years is that tax rates are going to rise, and that's going to increase the demand for municipal bonds. And so, one of the things that happened, there wasn't necessarily a tax cuts. Excuse me.
It's also because when they did tax reform, people, especially who lived in blue states, got a burden, a new tax burden, and so they're searching for a way to invest that's tax-free, and so they look at these municipal bonds. But for these bond issuers, part of the problem is that advanced refunding is no longer tax-exempt. That was a big change in tax reform in 2017. There's a bipartisan bill now pending in Congress to change that and add the exemption back in. Do you think it's likely to happen?
I think that right now, the fact that that legislation was introduced in May was a success as far as the industry and issuer groups that have been really lobbying and educating folks in Washington about it. But I think that it's really unlikely. I think that there are several legislative roadblocks. I think there are several things that Congress wants to do and needs to do before the end of the year. One of the things that we were also expecting that very well could happen is that the advance refunding legislation could have been added to a larger vehicle, like an infrastructure package, and we're not seeing that really materialize at all. That's really fallen off the face of what Congress is looking at right now.
Given the demand for munis, are there particular sectors that you like or particular states that you would invest in and those you would stay away from?
Yeah, I think that where municipals are concerned right now, there's a new fiscal reality. And I think that there are state and local governments that are managing that new fiscal reality. And let me say that the new fiscal reality is one where revenues are rising, but expenditure demand is rising faster in a lot of cases than where revenues are. And so in my mind, looking at the issuers that are able to manage that new fiscal reality, that's really what you want to do as an investor.